Welcome to today's Pip Talk. It's the 31st of October, 2019. I hope you're all well. We start off by looking at Euro Canadian dollar. Now, if you recall, we had the market outlook on Monday, the 28th of October, when price was around here. And we did say that we was looking for price to come up to clear liquidity. And of course, what we were looking for is price to come into a discounted zone before we look at making any type of sell. From that being said, what we can see is the Canadian dollar had the interest rate, which of course did lead to a negative outcome, which of course allowed the euro to gain stronger momentum. And of course, that's why we've had a nice bull run for the past few days. With that being said, we can of course see a doji here. And with that being said, we may now see a bearish reversal pattern. But in that respect, if you took this trade based upon the analysis we provided, you would have been able to catch over 200 pips. Okay, so that would mean you are currently still in a position of having a risk-free trade. We are still waiting for price to come higher before we look at selling. We'd like the areas of liquidity above to still be grabbed, and therefore we cannot move into any type of sell until we see prices higher, until we see prices achieved at a much higher level, a minimum of the 62% or around about this area. Moving on, we have the Euro NZD, a really nice trade we sent out a couple of weeks ago now. I know everyone in our premium channel have really been able to capitalize on this. Also in our free channel, we gave this trade out. We've also given it out to a range of our students who've been able to twin trade and catch 3 different entries on this. 2 entries that are highlighted. First things first, we caught the sell from here, and then after a re-entry was here, another entry was here. Now this trade has given us over 300 pips. Okay, so we've been able to capture this in three different trades, 3 different sizes, but most importantly, with the price now coming back, what we have been looking for is a re-entry. Now, if I was to draw out the Fibonacci here, what we would see is that price has not come back to a 62% retracement. And therefore, we have not seen anything that can give us a clear indication to enter another sell. With that being said, price has come back to the same area of entry. And for that reason, we have had people who have, contacted us and said, can they make a re-entry? Sure. If price hasn't broken this structure, and you would like to, have a wider stop loss on another trade entry, then by all means, feel free to take another trade. But with that being said, of course, we've still held our positions from the top, and we are now looking, of course, for price to create a new lower low, because there is a lot of liquidity below. With price not actually reaching 62%, as I'll draw out here, we may potentially see another push higher. We have the Australian interest rate next week. And of course, with the Australian interest rate, what we often find is the Kiwi tends to follow suit with what the Aussie is doing. So with that being said, we could potentially see a nice push upwards, tomorrow going into next week, before we look at catching a really nice sell, or we could have already seen the market making its move. It's come back 50%. And now it's off to create a new lower low and clear the liquidity below. With that being said, this is the reason why entries are important. We've been able to hold this trade now since the 16th of October. Okay, today is the 31st. So we've held this trade for over 2 weeks, and we are really, really starting to benefit now from, capturing a perfect position. And not only that, but being able to re-enter the trade at different areas, and more importantly, being able to take profit along the way, and even hedge this and place a buy if you were looking at the market correctly. So with that being said, we do want to see how the week plays out. Of course, tomorrow is Friday, which is also NFP, and the FOMC is speaking. We have had somewhat of a bearish week, so we may have seen the move already. We may now just continue to come lower, creating new lower lows. But of course, we have had a bullish run up here, and all we've really seen at the moment is higher highs and higher lows. So we really do want to see the market come down a lot lower to create a different pattern altogether. But with that being said, we're still risk-free on this trade, and we are going to sit tight and see how the market plays out tomorrow. Euro USD, again, on the 28th, which was the Monday, around about here, we did give out this. This is when we done the market outlook, and we mentioned that price was to come higher. So this is the exact same chart as Monday, this exact same setup. And of course, what we have seen over the coming days is price has gone exactly to where we wanted it to, and then it's turned around. For me, price hasn't come high enough. It hasn't come high enough to actually validate me believing that it's cleared all liquidity above. We may see price just slowly start to slow down in terms of the bearish momentum and actually move upwards before it looks to come back down. Again, with that being said, we have seen the dollar interest rate this week. We've got NFP tomorrow, and we've also got the FOMC. So we could see a lot of movement with Euro USD. So really and truly, this isn't a pair that we are looking to, to capture the market coming down. We've caught a nice trade coming up, and now what we want to do is just wait, take a step back, see how the market plays out, and more importantly, see what tomorrow beholds. We've had a really good week. We're up over 1,000 pips this week. There's absolutely no reason to trade tomorrow, and for that reason, we just want to sit back, have a look at what the market plays, have a look at what the market shows us, and go from there. Again, EURJPY, mentioned this on the call. This range, this box is pretty much a range, and we haven't really seen price break this range. We've seen price pretty much just go up and down, collecting a lot of orders, accumulating. When we go to a higher time frame, such as a daily, we can see a potential redistribution schematic here, redistributed from here again. And potentially what we may see now is price break this and come down to the downside. But again, with that being said, EURJPY is a pair that correlates with GBP USD. So if the pound USD is going up, this will go down, vice versa. And with that being said, of course, we all know what's happened with the pound this week and Brexit. Today is meant to be the day that Brexit is meant to, we're meant to officially be done with Brexit. And as you may know, of course, this has now been extended to next year. So we haven't seen anything really in terms of a decision that can give us clarity in a direction of where the pound should go. And for that reason, we've seen a lot of consolidation. And again, for that reason, we are sitting back and just waiting really to see what beholds of the pound. Of course, the smart money does operate inside of consolidation. But again, with that being said, with this pair being linked to the pound US dollar, and of course the dollar having its own discrepancies, we do just want to sit back and see what's going to happen with the pound so that we can actually attack EURJPY. Moving on, CADCHF, Canadian Swiss. Now, we had the Canadian interest rate this week, and it was a sweet one, as we can see. This was back to the 28th, where we gave out this trade on the market outlook, and we mentioned we would be looking to short this. With that being said, all we have seen is 136 pips provided to us courtesy of the Canadian dollar interest rate, and of course the Swiss being a safe haven. We've seen dominance kick in, and more importantly, we're holding this trade. Okay, we've been able to jump in 1, 2, and 3 times here, depending on how confident you've been. I've personally jumped into this trade 3 times, which has been once, twice, and 3 times here. With that being said, of course, what we are looking at is, if we go to the daily, we can see a very nice bearish reversal pattern here with the evening star formation. And of course, we've seen, a bearish run to the downside, liquidity being grabbed. We may now see a potential reverse up towards some market structure, maybe round about here before we see another dip downwards. But of course, with that being said, the CAD hasn't been performing too well. And with, of course, the Swiss forever being a safe haven, we can believe and have more confidence in looking for a sell, in light of the interest rate being a negative one. So moving on, last but not least, we have the Canadian dollar, yen, the CADJPY. Now, again, we've got the Canadian dollar interest rate, which we did mention on the market outlook call. I'd mentioned specifically that this was the institutional candle I was playing off in my yellow box, and I mentioned I'd be making a trade on the open of this candle, which was this black line, and the second entry would be at the top with this black line here, which would be 50% of this institutional candle. Now, when we go into a smaller time frame, what we can see is price did not actually go up. Okay, he was in a really small drawdown position. I'd be surprised. Okay, look, he was 11 pips in drawdown. Okay, we had a really tight stop loss of 35 pips. But with that being said, we was in a small drawdown. Price did not come up to our second zone for another entry, which just led us really to be in a position to hold the trade and see what the market gave us. And as we can see, we then was given a nice, clear understanding of, with the interest rate being negative, we could now jump into multiple positions. Prior to the interest rate being released, I entered into a trade here. This was before the interest rate. And of course, I entered into another position here. Now, with that being said, if we look to the left, we can see this does match up with the structure, which is why price has consolidated around these levels. So we can expect price to again consolidate around these levels, maybe a nice pullback up to here before the continuation downwards. And of course, these blue zones being the imbalance. So again, if we look at this pair right now, we've been able to capture over 140 pips with this pair. We are still holding, and we've, of course, we're holding this pair with multiple trades open, and we're risk-free. Okay, one of the best feelings of trading is being in a position where you're risk-free, but that only comes with having a perfect entry. So with that being said, this is the special pip talk done. Thank you for your time. We do have we have the pound and the Australian dollar interest rates next week. So it could be a very big week. We've collected over 1,000 pips this week. So there's absolutely no need to trade tomorrow for NFP. And besides, NFP over the past 4 months hasn't really been living up to expectations, probably over the last 6 months. So with that being said, tomorrow we are going to keep an eye on what's going on. But more importantly, if you're paying attention to these calls, you're also paying attention to your trading account, which means you're making money, and you definitely would have increased your account balance, your account size by a minimum of 5% this week as a minimum. So I hope you've enjoyed this week. We will be back next week, this coming Sunday, for the Sunday setup. And every Thursday, we are now going to provide a fundamental outlook. And it will be Fundamental Thursdays, so watch out for that on our channel. And for more information, please do not hesitate to reach out. I hope to see you on the other side. And remember, every day is money day.